Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. I hope you had a very great holidays. So today I have decided to take a look at the New Zealand dollar, mostly because although we have the nicely looking setups on the euro currency and Australian dollar that we have discussed last week in the weekly researches, but they mostly stand the same, and actually they do not need any updates or adjustment. So everything stands according to a long-term view that we have announced in previous weekly researches. But on the New Zealand dollar, the situation has changed slightly there, and we haven't taken looks in summer. So probably it makes sense to make an update on the New Zealand dollar. Besides, we see here very nice potential for trading, although it stands not in intraday charts, not on the daily, but it's a bit longer term perspective and a medium term perspective. The situation on the New Zealand dollar could change very significantly. Usually when we talk on the New Zealand dollar, we traditionally take a look at the dairy products, because you know that the New Zealand is a major, one of the greatest exporters of the dairy products. That's why the dairy market has the makes an impact on the New Zealand dollar, New Zealand currency, in the same manner as the crude oil makes an impact on the Canadian dollar. So, and last time when we have spoken on New Zealand dollar, it was a bit contradictory situation when we, from the one point of view, market formed some upside action, some bullish patterns, and we thought that markets really could continue to move high. But from another point of view, section was very unstable, and we wasn't able to find reason find the reasons of the current rally. So if you remember, we had the drop on the monthly chart. I will show you on the even monthly chart. So this drop, and market was forming the flag. But at the same time, it has moved above the yearly pivot point, and we said, well, something's standing bullish here. It's one from the one point of view, but from the other, it's bearish setup, so drop and flag. What's the reasons? And in summer, it was not really absolutely clear, but right now the clarity has come because we have put it in the weekly research. So if you like to, you could read about it. But the idea with the dairy market, because dairy market since the beginning of the year in the second half of 2016 has shown very great rally, especially the butter market and the dry milk. So, and this explains why the rally to the upside was not really straight up forward. As you can see, it's very choppy, flat action, not very fast, because the market has the dairy market has some relative impact on the currency, not direct support, but through the prism of the economy, and that has supported overall the upward action. Another reason why the New Zealand dollar was standing in this upward action is the uncertainty around the Fed policy, because if you remember, in summer, Fed was a bit in comfortable situation when they have promised to hike rate 4 times in the year, but when they have hike rate in the March, they're starting to postpone again and again the second rate hiking, and so they prolonged this moment right to the December. And as a result, this was just a two hiking instead of 4. But in the summer, they were particularly in this uncomfortable situation where they have to explain the market why they postponed the rate hiking. At the same time, New Zealand Reserve Bank shows the stable policy and even was surprised market by some hawkish moments when they haven't cut the rate when the market have expected to see this. And that overall has led to this upward rally. But right now, guys, we see some bearish moments in the development of this situation. First of all, Commitment of Traders report shows the massive closing on the long positions on the New Zealand dollar. Second, perspectives of dairy market right now is not as clear as they were here, with the growing strength of the United States dollar first, and the second of the increasing of the supply, major producers of the dairy products, as the rally stands under question. That leads to some dropping here. So, and probably this will continue further because Reserve Bank of the New Zealand follows some flat policy, while the more aggressive policy comes from the United States dollar, so from the Fed Reserve. This also will press on the market. Right now, we see already the breakout, this weekly chart, guys, breakout of this inner trend line. Right now, market stands at the major area. So it hasn't passed for the point of no return yet, but it stands on it. So this is important trend line. It's also weekly pivot support and fib level. And right now, market even stands slightly lower than this monthly pivot support and this fib level. Also, guys, I just would like to say that New Zealand dollar right now stands also below the yearly pivot point. And this definitely looks bearish. Also, take a look at the market has exceeded slightly the harmonic retracement. Here, this was exceeded. 1618 target to the upside has been completed. So, trend here is bearish. Market is not at oversold right now. And in fact, guys, below this trend line, the next support stands at 66 area, 6640. It's right here. So here is relatively free space, and if market will break it, this will mean not just the breakout of the trend line, but guys, this is the flag on the monthly chart. The breakout out of there gradually will lead market right to the bottom, right to the 61 area. Not really, maybe not immediately, but gradually market will continue to move out. Next destination in the short term will stand at 6640 area. So that being said, here we see that market stands at the crucial point. And depending on what will happen here, will tell us what to expect, whether the breakout happened or not. On the daily chart, guys, right now we don't have any patterns. Here we just could recognize the shape of the hand shoulders pattern. And if you will calculate the targets, you'll see that the ultimate target classical of the hand shoulders is the distance between the top and this neckline leads us directly to the 64, the major monthly support, while this A, B, C, top, D pattern will lead us to the 66. This top mostly stands due natural support resistance, and guys, as we have estimated, this major trend line of the monthly flag pattern. It's right here. That's market. That's why market has stopped here, so on way down. Other reasons just absent, because here we don't have fib support. Market is not at oversold on the daily chart. Trend is bearish. There's nothing more stands here on the daily chart. All reasons stands on the weekly and monthly charts. So that explains why market taking pause here in this area. Now we're coming to a major trading plan, what we will be watching for in the next week. To understand this, you should take a look at the 4-hour time frame chart, but first on the daily chart, take a look. This market is forming the same harmony pattern. So this is Garter's triple to sell. Drop, ABCD retracement. Drop, ABCD retracement. Again, drop here. Currently, we will be watching for that action, whether it will happen or not. Because if it will not happen, the market will just collapse here to the downside. This will tell us that major breakout has happened, and we should search for taking short position, opportunity for taking the short position. While if ABCD retracement will start here, we'll be watching for corresponding resistance, where we also will discuss the opportunity for taking the short. So on the 4-hour time frame chart, as you can see, our double repo pattern was not realized because we have expected to get the short covering before Christmas holidays, but actually market has taken the long covering and it was even drop further. Well, now it's not a big deal because it was a tactical short-term step. We haven't got it, so no problem. Now let's take a look at this pattern, guys, that we have. You can see that market is forming to the downside ABCD first. This ABC top hasn't been completed yet because hasn't been completed here. Its target was standing here at 100%. And even before market has completed, market has formed a bottom line and turned to the upside. Now we have the same part of this harmonic pattern. So you can see drop, ABC retracement, drop, ABC retracement. The first time market wasn't able to complete 100% target. Here again, we have this following A, B, C top. 100% target stands right here. Right now, market already has started to form the bottom line. So here it could for example, reach weekly pivot support 1, form the butterfly and turn to the upside action again. Something of that sort could be formed and show another ABC retracement. So you can see every time retracement rather deep, 618 probably. In this case, we will be watching for 71 area. So our trading plan stands on watching for this consolidation right now. If market will form butterfly around weekly pivot support 1 and turn to the upside, in this case, we will be watching for ABC retracement up right to the 71 area. If market will break this harmony of overall this sequence and drop further here, it will mean that major breakout of this trend line on the weekly chart has happened, and we turn to the second scenario where we'll be watching for just minor retracement for taking the short position, because in this case downward acceleration will continue. That's our major idea what we will be watching for in the New Zealand dollar. But in general, guys, a medium-term perspective for the Kiwi is not really good because just a combination of these factors. Daily rally under question. Policy of the Reserve Bank of the New Zealand is flat and brings a lot of uncertainty, while we see the real appreciation of United States dollar and coming aggressive action from the Fed Reserve, and that will press on the market. Besides, gradually as rates starting to rise in the United States, some kind of the carry trading will not as attractive, will become not as attractive as was standing before that. This also could bring to some closing of the positions in the New Zealand dollar. So let's see what we will get in the next week.